What is up, everybody, and Happy New Year's, even though we're like halfway through the month of January at this point. I'm excited to share another year with you guys on this channel. And in this video, I want to talk about the importance of scalping and just kind of talk about that. If for those of you who don't know me, I'm Fat Cat, and my pedigree has always been in scalping, and I've spent many years in my trading career learning how to hold trades, which is proven to actually be a lot more difficult in this market regime. So I want to talk about that, share some things with you guys on why I think it is important to learn the skills and the art of scalping. So let's take a look at this P&L here. So this would be today's session, the 11th of January, 2024. Quite a few trades you can see, and we've actually been trading a little bit of NQ here and there. And it's been tough. These trades right in this region right here, with the 12 lots where it went 23 ticks in my favor. We were getting into a very large hold that I thought would be a potentially large hold, and the trade ended up coming back. However, we cash flowed and scaled a lot of the size off, and we were only willing to hold a third of the size all the way to target, which never happened. It was a high probability trade in the sense that, you know, we had range advantage, meaning we were at the top of a range and there was already an established range, so there's a good probability that could pull in. And then we had a good bell curve profile that could also pull in. However, the environment we're in is relatively tricky. So a lot of trades have been coming back, and really in November, December, I started to flounder and struggle a little bit. October was amazing. January of last year was amazing as well. Overall, the entire last year was a good year. Very good year. The best year ever, which, you know, that's to be expected when you just continuously do this year after year. Each year should get better and better, in my opinion. So, you know, November, December comes, and we're starting to struggle a little bit. And let me share something with you guys. So this is the VIX, the volatility index, and this is a daily chart. And this is where we're currently at right now. We're at a 14.3. And as you can see, we've not been this low since before COVID, January of 2020. So the last several years, we've been, you know, well above a 15 VIX. So the higher this is, the more volatility there are in the markets, especially the ES futures contract, which is what I trade, and that's going to affect other markets like the NQ as well. And again, daily chart, and you know, we've been in 20s in October. We were in the 20s, did really well. And then last January as well, we were way up there as well. We did extremely good. Where let's go to January. Yep, right here. January 23. So we was in the 20s. You know, March as well was up there as well, hitting close to the 30s. So high amounts of volatility, and what happens is when the volatility is high, the average move is going to go further. So then, back then, it was easier to get 40 tick runs, 50 tick runs, 100 tick runs than it is now, because the volatility is starting to contract. So you're just not getting those types of runs anymore. More volatility, bigger ranges, bigger movements, more volatility, technical patterns and stuff typically work a lot cleaner. So price action patterns, all that stuff They typically tend to be a little bit cleaner when there's a lot more volume flowing in, because when you have a lot of volatility, volume is flowing in. Now, I know that we do have volatility in this environment. However, this current environment is excruciatingly fucking choppy, to where a lot of times you're getting faked out on both ends of the spectrum. So what I'm going to actually do is, so when I say you're getting faked out on both ends of the spectrum, what I mean by this is the market, it does inventory clears where it's attempting to break out one side, but in order to get it going, they typically run the other side to clear inventory, to hit a bunch of stop runs, to get algos that are trading off of that type of fucking price action to get in, and newer traders are getting in, and it just creates a new rift in the volatility, and then they attempt to break it out, and then it starts to get stuck again. Or they do push it out, but it doesn't go out that far because, well, the volatility really isn't there, and then they jam it back up. So you get in a lot of this fake outs to where somebody like me, who I trade very tight, I trade very clean. So I get into a lot of trades, and I keep, you know, my trades are relatively tight, and you can see here in this P&L again. Now, I know you got a 40 tick push against me, but that's an NQ trade. So a lot of these bigger ones, like this 35 ticker and this 11, those are all like NQs. This 14 was an ES, but it was a 4 lot, and it was risky, so I downsized on it. But as you can see, you know, we're running, you know, 1, 5. I believe that may have been ES2. I don't remember. But, or it could have been NQ. But we keep them generally tight in ES. 1, 1, 5, 4, 2. Generally, I'm working within a 7 to 12 tick range, which is relatively tight. 0 right there. So this MAE is measuring how far a trade goes against us versus, you know, how many ticks are in our favor, and that would be the MFE right here. So max favorable excursion versus max adverse excursion. So how many ticks did the trade really go in your favor or back against you? And that allows you to know if you're leaving money on the table or what your risk reward actually look like in the trade. So I trade relatively tight because my pedigree has always been in scalping. That's how I learned. Trying to get into a good, clean trade is very hard for me these days. And what does a good, clean trade mean? Basically, what I was just explaining to you guys. Getting into a trade where the price action goes, I'm in it, and it doesn't come back and go through me. It just continues to go, you know, 40, 50 ticks, which would be a really home run trade in this environment, in my opinion. Now, you can hit these 40, 50 tick trades in this environment. However, you're going to have to run extremely large, wide stops in order to do that. It is very difficult to get in to time a trade and get a 40, 50 tick run very cleanly. It's extremely challenging. And now they do happen. However, it's extremely challenging to get into a trade and get it to run that far in your favor. So, and that's ES. NQ is a different story. Obviously, NQ moves a lot more. But the same thing is going on with NQ. You know, 100 tick trades may have been more common in higher VIX than they are now, without the shit coming back and checking you. And it happens all the time. You know, I have a video called Slips versus Reclaims. I highly suggest you guys go watch that. And in that video, I talk about this phenomenon that you're seeing happen quite a bit, where trades, they go in your favor. You know, the market may just puke. It may dump, which actually happened today. We'll go ahead and look at an ES chart right here. This is today. And it dumped right here, but look how they, and they're dumping it, and they keep reclaiming these hard moves. Like, it rips up, you know, you might be short here, the motherfucker, and you're trying to hold it a little bit further, and the fucker comes way up. You know, maybe you're long here, but then they take a lot of that fucking move back, right? And then they take a lot of that up move back, and then it gets real tight, and then they just puke it up. Sure, they don't take this area back right here where it jumps, but I mean, if you're short up here, look, they just pressed you all the way up. So, you know, even here, they're starting to take a lot of this hard move up right back here, and it's not going much further, you know. You got a hard move here. What did it run? Let's see. You know, it ran 78 ticks. That's really, really good. But look how it starts to churn sideways and shit, and then it consolidates up here. You know, are you really going to squeeze the fucking thing for the max amount? You really going to fucking get in at the bottom and get out exactly at the top? Probably not. Does that happen? It does. But it's so unrealistic that it doesn't happen that often. And people who call that stuff on Twitter or whatever, congratulations. I've shared videos like that. It's nice to have your montage fucking trade where you did that. But in reality, that just does not fucking happen. You're going to probably cut it too early, or you're going to get fucking wicked out of the fucking trade or what have you, because it fuck checks you. Like right here, you know, one of the bigger ES trades, you know, we're getting short up in this region. And, you know, we're scaling a bunch and it's coming back, and then, you know, we're holding it and we're willing to hold it, and then it starts coming back. And at this point, I know the fucking trade's going to fucking fail. So I ended up cutting it well before it came to a break even, which was really great management. To be honest with you, we could actually probably look at it. All right, guys, so here it is. And what I'm looking for is a mean reversion right here, and it's behind me. Let me get rid of myself. You can see the mean right there. That's ES, and we're looking to mean revert the trade. You can see we're getting into it now. I'm going to actually play it at a higher speed. So we get into the fucking thing, and you can see there's a little bit of drama. I'm willing to take a bit of risk, cover it. But I know I have mean advantage, range advantage, and there's other things going on. And also these markets love to rotate fucking trend lines. Trend lines going up, not so much going on from the top side down. SMB did a video on this about these trend line algos that kick in, and I shit you not, I've always struggled with trend lines, especially last year, like channels and trend lines. I would fucking bitch about them. Now we're starting to learn how to use them, which is great. My trading is always evolving. So, yeah. So we're kind of just looking for this fucking thing to fail, which it does. Now we take off a little bit right there. Comes up against us again. We're still in like 8 lots out of 12. And then we take off a little more right there, which is a good call because it's a high node right here, and it could potentially rotate. I know my head's covering, you know, the price action, but this is the ES on the left. This curve is, you know, there's a high node here, and they could potentially fucking rotate it, which we're going to go a little further in the future. Which they do start rotating in that area. So, you know, we're keeping track of a lot of things here. And then I want to show you what the trade looks like when I finally decide that I think it's going to fucking fail. Because I think this is great. And what I'm really doing is trying to hold this like low of days, like 67s or some shit, which is way out there. Doesn't happen. But we cash flow and scalp and scale a lot of it, which is very necessary, and that's really the topic of the video. Okay, guys, so at this point, you can see that I got like the up and down trend line. What it's doing is pulling a pennant formation, and then this narration episode, which if you guys want, you can go to my coffee, and I have like fucking 95 fucking hours of like narrations, 400 something trades, 77 episodes or some shit like that. And you can watch this specific episode and watch the entire thing and all the trades on the P&L right here, this P&L. So if you guys want to see all of these trades, you can subscribe to the coffee. There's many other things there too, like case study episodes, DRC episodes, which is daily report cards. So if you're interested, that exists, and you could just hear my thought process on all this stuff. So, yeah, I'm talking in this narration episode how typically these pennants push up, and I'm a little concerned about that, which it starts to pop. Now, it's not something I want to trade, it's just context. So let me get to the part where I show you the exit. All right, guys, so this is the Auction Vista NQ, Auction Vista ES, the ES time and sales, unfiltered, by the way. So the market's coming up and it's starting to get tight here. You can see this is really loose. It's reclaiming. So the slips and reclaim video that I mentioned earlier in this video, this one here, go watch it. That same thing, and I need to probably get, no, I don't need to get rid of myself. That same phenomenon happens on this NQ Auction Vista, which is a 3-second chart, 3-second time chart. That's all this is, but it's got these white bars, which is abnormally large liquidity. Like you got this fucking 18 lot here, which is glowing, you know, so this is showing big and smaller blocks of order liquidity coming in, which in my opinion, it doesn't really matter to me. It used to, but it really doesn't at this point. Like you got 124 right here, and right behind me, it's glowing up here. It just really doesn't matter to me. But that's not the point of this video. So anyways, it's starting to get tight here. So I go watch this stupid thing right here. So what I want to see them do is puke this entire reclaim. If they can puke that entire reclaim, that's good. At this point, the trade's already like tested my entry a few times. So I know that if it's going to test me a third time, it's probably going to fucking go through. So we're watching NQ because correlations. Yes, there's episodes on that. Go watch those. So we're sitting in here and it's starting to, we're looking for all the slip slack is coming out, meaning it's getting tight. So when the market starts to get real tight, that's not good. I want them to push this reclaim, this hard move up. It's starting to get tight up here, and it's real tight and filled in. And as it's staying up there, that to me is a sign they're going to push into me. So there's a micro range building out here. What I'm wanting to see is, can this high note at 84 on ES pivot, and can they jam through here? So they're not. This range is expanding more and more. It's getting tighter and tighter. And for me, I'm like, this might be over with. So we go immediately to get out. And what we do is we give ourselves 4 ticks. So instead of letting the fucking thing go break even, we end up picking up an extra $200. So that helps. That really does help in the grand scheme of things, because this environment is so incredibly, brutally choppy that everything I tried, most of what I tried to do, didn't run the target. Now, I do take these smaller gap plays, and those have been working beautifully. And ever since I started being a little more aggressive about hitting smaller gaps, I have a video on that if you want to go check it out. Steal this playbook in the playbook. I love it. I understand that. That's how that's where I found my stride in trading, was playing gaps. Still play them. Now we're starting to play smaller ones, which you can see on the charts here. All the yellow boxes are gaps. So we're playing, 2-pointers, ugh, 2-pointers, 1-pointer gaps. So 4, 8-tick, 12-tick gaps. Anything beyond that, we want to make sure the EV count is extremely high. And just playing really solid, very high EV gaps, smaller EV gaps, and it's been working beautifully. Now, don't get me wrong, it's not like that cut and dry and easy. What trading reminds me of, because the market is so choppy and stuff, and the difference between someone like me, and I've made a video on this in the past, where you need to learn how to manage by hand. You don't want to put in a stop and a profit target, okay? Because as that price action is rotating and chopping, if you understand how to read it, the context can change. I have an EV video. Go watch this one. Trading is very much like poker. As the price action starts to do certain things and the trade's working in your favor, depending on what that price action starts to do, it can be telling you that your trade may fail. So why keep it on and then get stopped out when you can pick up something off of it? See, I think that's what makes the difference. In my trading, that is what makes the difference. So being able to cash flow aggressively like we saw in that last trade, and then picking up the $200 instead of letting it go through me and then potentially stopping out 12 ticks, and that, what is that? 50 times 12. I mean, that we would lose $600. So, instead of being up 1,000 right here, we would only be up, $400 fucking dollars. And that would drastically change the P&L. So doing this shit by hand and managing by hand really makes the difference, because you need to understand how price action in the context is shifting. It's like you get pocket aces in a poker game, first hand, pocket aces. Well, depending on how your opponents are betting and how the flop, turn, and river cards come around, what if the flop, turn, and river come and you have nothing else? You're not getting anything else. You just have your pair. All of a sudden, that really good hand isn't such a good hand anymore, especially if your opponents are still in there. And the same thing's happening in your trading, that you shouldn't be stagnant. You need to learn how to maneuver with the price action, because that can be the difference, and that is often the difference in my trading. Because a lot of the times, what I'm really looking for just isn't fucking working. And there's often a finesse. And a lot of the times, what I'm looking for works a little bit, but it doesn't work all the way, especially in this regime. This is the regime we're in. We're in a fucking, sub 15 VIX, a 13 VIX. I mean, that shit is extremely fucking low. And it hasn't been like this for years. And a lot of people aren't doing this anymore. When the volatility was really high and you had the GameStop AMC thing, and the volatility was really high, a lot of traders came in. My channel exploded. Now, with the way things are now, with the regime we're in and how brutally choppy it is, a lot of people are simply leaving the industry. You're just not seeing people do this anymore. And my thing is, if you want to be here for the good times, you got to be here for the hard times. And also, it's a lot easier to predict the next few seconds than the next few minutes. And the next few seconds, I'm going to be talking about the next few seconds and the next few minutes in this sentence structure of talking about how scalping is really good. We can predict that. You know that I'm going to talk about why scalping is good in the next few seconds. But what am I going to be talking about in the next 4 minutes? We really don't know, do we? We really don't know what I'm going to be talking about in the next 4 minutes. However, the next few seconds, you can kind of understand what might happen. So therefore, in my opinion, scalping is a very crucial, essential skill, especially now. Since the volatility has contracted quite a bit, even though it looks like it's there, I mean, come on, look at the charts. This is a 30-second chart. Look how insanely choppy it gets. It gets excruciatingly choppy. I mean, right here, look how choppy it is for 30 straight fucking minutes, right? And then the market does puke right here. You see what I'm saying? The market does puke, but I mean, look at these pullbacks right here. Look at this pullback. It pukes right here, but it pulls back 16 ticks. It pulls back 16 ticks right here, which is a lot of fucking ticks in the ES. It goes down and it pulls back 16 fucking ticks, and then it dumps again. And you think the fucking move is on, and then all of a sudden it pulls back 18 ticks. And that's a lot. And in hindsight, it looks all good and dandy, but you got to really look at it from this noisy perspective to realize how just you're going to get shooken out of fucking trades. Most traders on the hard right edge, when it's fucking ripping back 20, 16 ticks, you're going to get shooken out of that, right? It's easy to look at it right now and be like, no. But seriously, when it's ripping up against you, that is going to test you. Almost all of you. So, like, mentally, your mental resilience. So, since volatility has contracted, and we're just not getting the volume flow we've once got in, really, more volume, more volatility, and it's at the point where I can read almost every order coming in on the time and sales, which if we look at the time and sales, we haven't looked at a time and sales in a long time. You can read a lot of this. It's let's go back a little bit. So like I can process a lot of this, and notice how it's a lot of one lots coming in. 13, 12, 10, 2, 25, 11. There's a 46 lot. Yeah, it speeds up and then it kind of like fades. But a lot of orders are being cut up in the one lots. 5 lots, 3 lots. We're in a regime change, and these traders are cutting a lot of the orders up. Also, the markets are so interconnected. These fucking markets, Russell, NQ, all of them, even like the FANGs, they'll all just flush at exactly the same time, where with a flurry of orders. So these markets are really, a lot of the way these markets are moving is market efficiency. A lot of these markets are moving with other fucking markets. It's not simply that there's order flow coming into this specific asset, which there is, and they kind of diverge a little bit and they don't quite track each other perfectly, but there's a lot of times where the markets will move aggressively at the same time, and then a flurry of market orders comes out of absolutely nowhere, creating the illusion of volatility because they all move together. So in a lower volatility environment, it's very low volatility. Today was relatively decent, but also the way I know volatility is low is if you look behind me at the auction vista on ES, a lot of like right here, it's kind of stuck in a 3-tick range. There's a lot of times where we'll get stuck in a 3 or 4-tick range, and this thing will be like flatline, kind of like grandma's pacemaker when she passed away in the hospital, right? It'll get really flatline where ES is really churning in a 2, 3, 4-tick range for minutes and minutes and minutes. And that's not good volatility. And when the market is not moving, a 2-pointer, a 3-pointer, that move is as good as a 40, 50-tick run, 60-tick run back in the day when the volatility was high. So you got to understand when you're picking up a point in the ES, back when the volatility of the VIX was higher, that 4-tick move used to be a 12-tick move on average. It's just you have to realize that things have contracted quite a bit. So therefore, it's not going to go, like a good move is just not going to go as far. That's why everybody preaches, S&B preaches stocks in play or volatility's essential. It's because it's easier to cut a trade and there's a higher chance that it will really rip in your favor. And if you can really paper cut your way into trades and stuff, which I find in this environment, you need to be more of a precision hitter. I find this environment, I mean, it's not as easy. Like, I find this environment to be more geared towards higher skill level traders. And if you're just coming into this industry or what have you, you're dealing with a very challenging time. Don't get me wrong, volatility has its own challenges. However, there is a beauty in this environment, and it's a good environment to learn in. And I don't, sure, I like higher volatility because the P&Ls are bigger, but it is what it is. Market environment dictates P&L. Shark talks about this on his chat with traders. That's just how it works. And with higher volatility, taking a 4-tick loss or a 8-tick loss or a 12-tick loss, that's not a big deal. But in this lower volatility, that can really fuck you, and it can take like many trades to dig out of that, especially in the ES. And don't let NQ's volatility make you think otherwise. Yeah, I know NQ is fast and it moves a lot, but even now at this point in time, NQ's not moving the way it used to, and it can fuck you just as bad as ES can. So don't let that illusion of the NQ, because it moves, makes you think it's any easier than the ES, because it has its own issues, because it can really churn your favor maybe 2 points or whatever, then it just blows out against you 50 ticks like that. And it really isn't giving you anything. So you have to be more of a precision hitter. You got to be really tight in this environment. I mean, I've already talked about it in a recent video, I believe this one. With that being said, I think learning how to scalp is excruciatingly important, especially because a lot of trades are just going to come back. A lot of trades are going to come back. The moment the market pukes in your favor, don't think that's usually not a good thing. I'd rather it walk away in my favor. If it just dumps in my favor immediately, yeah, sometimes it can keep running, but most of the time they're going to bring the price action back and test your entry. And not only are they going to test your entry, they're going to push through your entry a lot of times. So that's why I got out of that one trade in that example, because that was the third test, and I knew that at this point it's starting to get real ugly. And I would have got short again if it ever came back down, but it never did. So the opportunity wasn't there. And then later in the session, we took some longs, which were pretty good. So, I think it's very crucial and important to learn scalping, because that skill set has allowed me really fix the issues I had in November and December. And it wasn't like November or December were bad. We floundered a little more. We did fine. We just had more red days than we just had more of a series of red days than we really had when the volatility was a lot higher. Again, did fine, but it was a challenge. And by making this adjustment for this regime via scalping, that's made it a huge difference. Now, you don't want to go in and cowboy it. You want to be hitting really good setups or bigger picture setups. Just don't hold it all the way to target. Just scalp it. So, a lot of times I'll be hitting them. Yes, we're hitting smaller stuff now, but there are times where I'm going to hit bigger trades that I think can go pretty far. And while they go decently far, a lot of times they don't go to target. So usually I'm just going to scalp the fucking things, because most of the time they're going to fail. And depending on how the day looks, I'll leave a little bit on just to see if we can push it any further. Which a lot of times it just fucking comes back anyways. And I'm somebody who's left a lot of trades on the table, especially over the last year. I mean, learning to hold trades it's a tough business, and you're going to leave a lot of trades on the table. And I think that's a great skill set. I think it's important to understand how to do that. However, don't handicap yourself by just being one or the other. I think it's important to learn how to scalp, But again, same thing with big trades and scalps. I think learning how to do it by hand, understanding how the context of the price action may be shifting in your favor or against you is important. I think it's like going into war. Once the first plan fails, there is no plan, right? Something on the lines of that. It is the enemy can be flanking you in weird ways, or there's something you didn't realize would happen, or it's just the way the battlefield is shifting in your favor or against you that you have to be wary of. It's really managing by hand. I mean, just managing a trade overall is literally like, I'm going to call this soccer. I know a lot of you guys are going to fucking disagree with me. We'll just kind of have this on in the background. But I mean, this is just, trading is just like this. You're trying to get that fucking ball into the fucking net, right? You're trying to get the fucking ball into the fucking net. But look at the way they get the fucking ball into the net. They all hit it off each other's fucking heads. Right? That was never fucking planned. Right? All of them just hitting it off their fucking heads. Hit it off the head, and there's this guy. That wasn't planned. It just worked in your favor, and that's like the price action being a bit random and just working in your fucking favor, right? The goal is to get the fucking ball in the net. The goal is to try to get your trade to go to target. But how hard is it to actually get this fucking ball in the fucking in the fucking net, right? It's not that easy. Obviously, these are all montage things, but it's not that easy to get that fucking ball in that fucking net. You know, there's a lot of times it gets defended or the other team comes in and takes it from you. Look at this guy totally fumble fucks it. Right? And look how it just happens to go in. So that is what trading is. And that's why you need to learn to manage it by hand, because that can make the difference. And much like playing soccer, there's all this other skill sets that goes into it. But ultimately, handling the ball, it comes down to handling the ball and maneuvering your opponents down the field and ultimately trying to get it in the fucking goal. It ultimately comes down to handling the ball. Trading, everything you're doing, all your review work, all your prep work, everything you're doing, ultimately comes down to how well can you manage that trade. And that is the hardest part of it. Being able to professionally maneuver a soccer ball down the field is excruciatingly difficult and challenging, because things are either shifting in your favor or against you, depending on how the other players are moving. And that is exactly what is happening in the price action. It is either shifting in your favor or against you. And just learning how to like surf that, there's a lot of intuition you need to develop in order to do that. But I think it's a crucial skill to learn how to manage by hand all your trades, manage them by hand, and then learning how to scalp. So with that being said, I hope you guys enjoyed this video. I look forward to 2024 with you guys on YouTube and making more content, because I have some good shit. At least the next video is going to be fucking awesome. So I hope you guys look forward to that, and I'll see you in the next one.